This is the Less Insurance Dependence podcast show with my good friend Gary Takas and myself, Narain Arul Raja.
We appreciate your listenership, your time, and most of all, we appreciate your intention to reduce insurance dependence in your practice. Our goal is to provide information that will help you successfully reduce insurance dependence and convert your practice into a thriving and profitable dental practice that provides you with personal, professional, and financial satisfaction.
Hello, everyone. Welcome to the Less Insurance Dependence podcast. I'm your co-host, Lester D. Alves. This podcast is designed to help dental professionals gain control of their practice, reduce stress, and grow without relying heavily on insurance. Before we begin, a quick message from our sponsors, Equa Marketing. Equa Marketing is offering a complimentary marketing strategy meeting where their experts will show you on how to attract high-quality patients and grow your practices with strong online visibility. So if you're ever wondering about your online visibility, how well you're doing, you can visit lessinsurancependence.com/marketing-strategy-meeting to schedule a complimentary session. And if you're interested in moving towards a fee-for-service model and you're looking for mentorship, you can always book a complimentary coaching strategy meeting with Gary Takas at thrivingdentist.com/CSM. Today, I'm excited to welcome Dr. Gerilyn Alfie. Dr. Alfie helps dentists understand their numbers so they can make better decisions, set clear goals, and build healthier practices. In today's episode, it's titled as The Numbers Dentists Must Know to Reduce Insurance Dependence. We will focus on the key metrics that reveal how insurance is affecting a practice and how dentists can use those numbers to set strong goals for the year ahead. Dr. Alfie, we're excited to have you here. Thank you for joining us.
Thanks for having me, Lester. I'm excited.
So, to start, when dentists want to understand how insurance is impacting their practice, what key numbers should they look at first?
So one of the most important metrics they want to be starting to track, if they're not already, is what is the difference between their gross production, which is based off of your office's particular UCR fees, and what your net production is, because the difference between those is the amount of adjustments that you're forced to make if you are in network with any of those insurance companies. And the challenge is that a lot of offices will input the insurance company's fee schedule, and that is what they are listing on the walkout statement as well as when they send in to the insurance companies. And the problem is you can't track how much money you're losing by doing that. And I know a lot of the practice management software companies recommend that you input the insurance fee schedule and utilize that for patients that are within that plan. But you are blind to how much money is walking out the door constantly when you are seeing patients in those particular plans.
Exactly. I think that gives a strong foundation to this conversation. Now, what metrics clearly show when insurance participation is hurting profitability or growth?
I'm sorry, say that again, Lester?
Yeah, so what metrics clearly show when insurance participation is hurting profitability or growth?
Yeah, well, as everybody knows, the only amount that you can ever collect is your net production. And so when the office has a better idea about what their gross and adjustments and net production is, then they need to look at what are their collections, what is the turnaround time for their collections as well, because one of the things that a lot of offices don't consider is if you are billing out and waiting to get paid from insurance companies, you have a 30 to 60 days, sometimes even longer lag time. So the time value of money decreases, it reduces your cash flow and your spending capability. And so if you're not tracking what the amount of AR that you have is, what categories they fall into as far as current or 31 to 60 days, 61 to 90, 90 plus days, there are a lot of offices that have a ton of money just sitting out there waiting to be collected. And if you don't have someone in your practice who's very good at following up on that, you may be wondering, why am I producing so much and I'm still strapped for cash? And it's probably because your cash flow is not as healthy as it needs to be.
Amazing. I think that's very eye-opening. You just mentioned,
Mhm.
and now many dentists feel busy but not profitable. How
Yeah.
can Matrix help them see the difference between production and true profit?
Yeah. So whenever I start talking to a new client, I always say, why did you contact me? And they'll say, well, my practice seems like it's doing well. I'm really busy. And I always say, okay, you're busy, but are you profitable? And I
Mm,
sometimes get a weird look because they haven't been taught that those two things do not go together.
yeah.
Sometimes doctors look at their schedule and they think, oh, this is great. I'm booked out for, 4 to 6 weeks, and hygiene is booked out, fully for 6 months. And that's not actually a good thing, because now you don't have time to get new patients in. Now you can't service
Mm,
emergency patients who might end up becoming a regular patient for you. And
mm,
if you want to start to pivot away from being insurance dependent, you have to start factoring in what is your hourly overhead, which a lot of
mm,
doctors have no idea about. So you have to calculate your regular overhead first, figure out for the number of hours that you work, throughout the course of the year, how much does it cost you to have the doors open every single day? Because that's a very eye-opening number as well. And that is the
yeah.
number that everyone on the team needs to have in the back of their mind when a patient calls to cancel an appointment. Because sometimes you'll hear them say, oh, it's not that big of a deal. It's only a cleaning. Well, it's never only a
Mm,
cleaning, never mind the
yeah.
physical ramifications of a patient missing their hygiene appointment. It is
Mm,
that production fell off of the schedule, and it costs the doctor probably somewhere between $300 and $500 per hour on average for
yeah.
most general practices. So you not only lost the production, you lost the ability for the doctor to be able to diagnose treatment and have that translate into treatment on the dental side. That patient lost the ability to be evaluated and potentially catch oral cancer or periodontal screening or cracked teeth that don't have symptoms yet. And
Mm,
you lost probably closer to $600 to $800 from that one cleaning appointment cancellation.
exactly. So basically, being busy means always doesn't mean be is successful.
Right.
So exactly. And
And the
now,
offices that are super busy like that, they sometimes welcome those cancellations because it's the only time they have a chance to catch up
mm,
and catch their
yeah.
breath. And so I would always say that the numbers tell a story, but they never tell the whole story. And we never make
Mm,
decisions based solely on the numbers. But that being said, there are numbers that you have to be 100% aware of, but you also have to take the pulse and the temperature of how are you and your team doing? Are you constantly just stressed out? At the end of the day, you're worn out. You can't remember having conversations with your patients because
yeah.
we are in a relationship business. And when you start to lose that ability to connect with your patients and check in with your team throughout the day, then you're just a hamster on a wheel. And that's not what any of us went to dental school for.
Exactly, exactly. And now, how should dentists use these numbers when setting goals at the beginning of the year, especially at this time of the year?
Yeah, that's a great question. So when I'm working with my clients on setting goals for the coming year, we always
Mm-hmm.
start out with how much growth do you want to see in this
Mm,
year compared to last year? And then we have to figure out, is that a realistic number? Because then we have
mm,
to calculate how many hours will the office be open next year to see patients? How many hours is each provider available to be able to drive production? And then we have to figure out with the amount that you wanted to grow, and if you're going to work X number of hours, then that translates into what is the hourly goal for each producer? Because if
yeah.
my doctor says, I want 30% growth next year, but I also want to take off, 2 additional months, I have
Mm,
to say, well, that's great. So you're committing to producing $2,000 an hour, then that's your goal.
yeah.
And then, we start out lofty, but we have to bring it back down to earth because we want to make sure that it's an attainable goal. We don't want it so far
Mm,
out of reach that it's impossible because that gets defeating. But we also want it so that it makes everybody just work a little bit harder. Because if you're hitting your goal regularly, it's not high enough. You need to raise your
yeah.
goal a bit. You should be within about 95% of whatever your goal is on a regular basis. That's the right number because that
Mm,
motivates us to hustle a little bit more. And the other thing that you
exactly
need
that.
to consider is what is your new patient flow and where are they
Mm,
coming from? Because that is a big driver for a lot of practices.
Exactly. Like you said, like you have to always like numbers do tell a story, but if your numbers are not realistic,
Mm-hmm.
it doesn't make any sense.
Right.
So yeah. So what mistakes do you see dentists make when they track numbers but do not act on them?
Okay, so I'm going to throw my husband under the bus here.
Right.
So my husband has high blood pressure, and he checks
Mm.
his blood pressure, I don't know, 3, 4, 5 times a day. And
Okay.
as you can imagine, it fluctuates throughout the
Mm.
day, as it does for all of us.
Yeah.
And he stresses when it's higher and he's happy when it's lower, but he hasn't really assigned any causative factors to why it's higher at certain times or why it's lower at certain times. And I see a lot of other friends of mine who have the same issue. And the problem is that they may know what their numbers are, but if you're not changing your lifestyle, then it's that definition of insanity, right? Where you keep doing the same thing and you're hoping for a different result. And it's
Mm.
the same way with doctors. Now, if any of you are tracking your numbers on a regular basis, first of all, I want to congratulate and acknowledge you because a great number of doctors rarely check their numbers. They're,
Mm.
mostly checking their QuickBooks to make sure they have enough money in the bank and that they can clear payroll and pay themselves. And that's not a
Yeah.
good place to be either. But if you are checking your numbers on a regular basis, great. And my question to you after that is, what are you doing about it? Because I
Mm.
don't think knowledge is power. I think what you do with your knowledge is power. And because
Mm.
dentists in general tend to be very risk averse and go down the rabbit hole of every possible scenario that could happen from a decision that they make, and they get analysis paralysis. And what I tell my clients all the time is deciding to stay stuck is making a decision. If you decide not to decide on something, you're making a decision. You're
Decision.
deciding to stay stuck. I mean, it
Mm.
comes from the Latin to cut, and you have to make a decision and then follow up, come up with a plan, get your team on board, and then start tracking it to see, is this the right way for me to be going? And if you're not doing that, and if you don't know what your year over year growth, or hopefully not, but decline is, and it's not knowing what the numbers are, it's then figuring out what's the causative factor. I mean, we are dentists, we are diagnosticians. We do this for our
Mm.
patients every single day, but we don't do it for our own practice
So,
in general. So
yeah.
know what your numbers are and then work with your team to figure out why are the numbers showing up the way they are? Because there's always a reason for the numbers. They don't stand
Mm.
alone.
Exactly. Exactly. Now, for dentists who wants to reduce insurance dependence this year, how can Matrix guide smarter and more confident decisions?
Yeah. So in addition to knowing what your gross production is, your adjustment percentage, your net production, your
Mm.
gross and net collections, you also want to be able to check what is your active patient base number. Because if you have
Mm.
fewer than 1,000 active patients, I don't recommend this as the time. You're still in a growth
Yeah.
phase. It's not the right time for you to start making major changes that will impact your practice, even when handled in the best way possible. You want to
Mm.
know how many new patients you have coming in per month, where they're coming in from. You want to ensure that your team is on board with this, and you have to go through specific steps. You also want to check at not just what is your gross production, adjustment percentage, and net production for the office as a whole. I would recommend you
Yeah.
break down all of your patients into their insurance categories and see which insurance companies are forcing the greatest percentage write-offs for you, because the average is somewhere between 30 to 40, but some of them are
Mm.
even worse. And can I name names of specific companies on this? Or
Yes, you can.
everyone
Yes,
knows,
you
if
can
you're
do that.
watching, you know which one I'm talking about. It's a Greek letter. And
Yeah.
there are some offices where the insurance forced write-off is up to 50%. Now, it also depends
Mm.
on what plan you are in network with and what your actual fees are. So, the
Yeah.
percentage could be much higher than that. But on average, the doctors are losing a significant amount. So you want to figure out within each insurance patient base, which one is forcing me to make the biggest cut off the top. Now, the
Yeah.
other considerations
Mm.
you have to make are, what is my area like? If you work in a town where there is let's say a huge factory or a huge distribution plant or something like that, and
Mhm.
everyone that works for that particular company is on one type of plan and they all come to your practice, even if that's the worst write-off, that's not necessarily the first one that you want to start with. You want to start with one
Yeah.
that has fewer patients, And it's a little bit easier because it's going to be a training period for you and your team as you start to extricate yourself from these plans. You have to set your start date. You have to figure out, when you're going to have those conversations with patients face to face. I recommend that you don't plan to drop for at least 6 to 9 months. You need to start laying the groundwork. And why do we say 6 months? Because on average, that's when a patient's coming in for hygiene. So you can have face-to-face conversations. Don't just send out some form letter. That is the worst way to handle it. And allow your patients to ask you lots of questions, which means your team has to be quite adept at and trained on and comfortable with answering those questions in a way that highlights the benefits to the patient as to why you've made this decision. And you got to make sure you've got great customer service, boost up your marketing. Equa is great at that to help a practice position itself. But you have to start doing everything now to plan that realistically. You won't be out of at least one plan, most likely until the end of this year. You have to set a realistic goal for yourself. And when doctors get frustrated when I tell them that, I say, how long did it take you to get where you are? You've been on this, hamster wheel for 10, 20 years. And you think I'm going to just wave a magic wand and within like 30 days, we're going to be able to transform your practice? It takes a long time to turn the ship around. You've got to be patient and trust the process, because when you follow it the right way, you minimize the impact to your practice. My practices that have dropped insurance dependence and are either 100% insurance independent, and I have a few that are fee for service. And some of them started out with membership in, I'm not exaggerating, 20 to 30 different plans and companies. It took a long time for them to get to this point. However, they have lost fewer than 7% of patients with each particular plan. So when doctors are worried about losing patients, they think, oh my God, all my patients are going to leave. Well, if you don't handle it right, they probably will. And if you haven't been providing great customer service and great dentistry, then they're just looking for a reason to leave you. And this is the perfect, reason for them. However, when you handle it the right way, what every single team has told me is, you know what, Dr. Alfie? The first patients that bailed were the ones that we were happy to see the back of. Because many times those are the patients that are driven only by what their insurance is going to cover. They, nickel and dime you for every single thing that needs to be done. They don't want to hear about any other discretionary or comprehensive work. And that is someone that you're too nice to fire. So they make their own decision to leave. And so when you think about, if you've got a practice with about 1,600, 1,800 active patients, if you're only losing 5 to 7% of patients within one insurance group, it is not going to impact your practice in a bad way, because you're also now freeing up time to have new patients who are fee-for-service patients come in, who will appreciate the extra care and time and technology and expertise that you have.
Exactly. I mean, none of this is going to be overnight success. You got to plan everything step by step. And so many advice and good nuggets shared by you, Dr. Alfie. So anyone listening in, they want to get in touch with you, or they want to, have a discussion with you, or even have a chat with you about their practice, what is the best way that they can contact you?
Yeah, so the best way usually is you can email me at Gerilyn, Gerilyn, at getaheadcc.com. Or you can send me a text at 312-479-4427. And you can find more information on my website, which is getaheadcc.com.
Exactly. You can find all that information on our on the website when this episode is going live, on the release notes of these episodes. And Dr. Alfie, thank you for joining us today and breaking down the numbers dentists truly need to understand.
My pleasure, Lester. Thank you for having me.
And here is the key takeaway. So when dentists know their metrics and use them to guide decisions, they gain clarity, confidence, and control. That clarity makes it much easier to reduce insurance dependence and build a healthier practice. Now, this podcast is about taking action. First, if you're looking to do a health checkup on your website, on your web practice website, you can schedule a complimentary marketing strategy meeting with Equa Marketing at lessinsurancedependence.com/marketing-strategy-meeting. And secondly, if you're looking for mentorship, you can book a complimentary coaching strategy meeting with Gary Takas at thrivingdentist.com/CSM. All these sessions, everything mentioned in this podcast is complimentary, and these sessions are here to help you turn insights into real progress. Thank you for spending your time with us. We look forward to seeing you in the next episode of the Less Insurance Dependence podcast. Keep moving towards a stronger and more independent practice.